let's look at the market cap this morning, 799, trying to get back to that $800 billion mark. It's up 0.61% this morning. We'll see volume traded down by 5.84%, and Bitcoin dominance still standing at 40.09%. Let's look at the price of Bitcoin from 2017, New Year's Day, up till now. We see 2017, Bitcoin was traded at $998. That's January 1st, 2017. That was the price. 2018 was up 14,000. Big move from $998. And 2019, we had a breakdown there to $3,692 per Bitcoin from the 2018 high there. Then 2020, we had Bitcoin trading at $7,195. A flip over now, 2021, $29,022 there for 2021. That we saw a breakdown there, moved up. 2022, we saw Bitcoin trading 1st of January, $46,319. Then fast forward, we're here now, 2023, $16,678. But if we look at this price at 2023, still way above where we started at 2017. But if we go down further, obviously the prices were still, much lower. So Bitcoin definitely has come a long way right now, even though we're at about 65% down from the last high. Let's bring in Gilbert Jopata, our financial market analyst. Hello, Gilbert.
Morning.
Morning, Gilbert. Happy New Year. Great to have you. And obviously, what's on the mind of investors now is what is in store for Bitcoin in 2023. What are you seeing?
Okay, there are a whole lot of things we should be looking at, but paying attention to the macroeconomic outlook and the risks of a recession and the money print has been on. It seems like 2023 turns out to be a tough year in regards to asset pricing for the cryptocurrency market. I would have hoped to see otherwise, but there is no sugarcoating for this. But away from price action, I read a report that described DeFi as a broader trend of Web 3.0, and I agree with that. And meanwhile, we could also see Amazon, Apple, Facebook, Instagram integrating blockchain and non-fungible token to its platform, which this is actually huge for DeFi. So I actually expect a huge interest in DeFi this year. We are going to see a trend shift towards DeFi. Binance also announced that they were investing heavily into DeFi. On the other hand, I really look at regulation and tax is going to come into more full enforcement or having the right regulatory framework. You know what happened to the likes of Luno, FTX, have actually drawn the attention more of regulators. The attention are presently in the market, and they will actually have the right framework and will have the presence of regulators in the industry this year. And also another trend I'm looking at is the NFTs and the metaverse. We have seen Walt Disney, even Donald Trump, Facebook, Instagram are all big players right now in the NFT and metaverse community. And then one very major place I think we should look or pay attention to is the fact that I expect more institutional investors in the industry. Because if first of all, we are able to pay attention to the price action, when institutions come in, they have actually their structure at which they enter into the market. And if we pay attention to DeFi and market cap increasing, we know the fact that regulatory framework is in place, because regulatory framework will create more like a legal playing ground for more institutions to come into the market. We also pay attention to NFT, the metaverse, and institutional investors. And these institutional investors I'm now looking at is those who come in with a long-term mindset. These are fundamental investors. The disadvantage of these fundamental investors coming into the market is that they are going to increase the cost for institutional investors to buy in. For example, if the price of Ether is at $1,000 and once institutional investors start accumulating, they are going to increase the cost. We may still be in a bear market, but Ether may stabilize strong at $1,500 or even $2,000.
All right. All right, Gilbert. Well, we'll keep watching, and obviously we'll keep tracking, tech coming out from the crypto space going into 2023. Thank you so much, Gilbert Zapata. Happy New Year.
Yeah, wishing you safe.